a bullish signal like that, it makes me think about demand, Alex, from all of its users and customers.
Yeah, but I just want to point out again, DuPont. I mean, we're looking at the worst day, I think, since like 2008 for this stock. Chemical company, real economy, and the outlook for demand is not great, Scar.
Yeah, not great, and it certainly raises a lot of concerns about other companies in a similar industry. And it goes back to that idea about industrial customers showing some weakness. That's something we heard from Texas Instruments. Carol, as much as ASML came out with good numbers and TSMC certainly revived optimism for the semiconductor industry, Texas Instruments was a bit of a cold water reality check.
Yeah. Yeah, no, it's interesting, right? Yeah, exactly. It's a reminder. But we have to remember, like, right, not all of these chip companies are the same. And I think about something that's actually equipment, which is kind of the early end of that semi-cycle, if you will. And so, I don't know. We'll ultimately see, right, when we get through all of these earnings. And we have Tesla.
It has just crossed.
Yeah, so let's get right to it here with Tesla. The numbers coming in, EPS, the bottom line number, coming in at $2.27 a share. I have to look up the comparison there, but on an adjusted basis, here's your comparison. 71 cents a share on an adjusted EPS basis. That's a bit of a miss by about 2 cents. The street was looking for 73 cents a share. Here's your revenue number, $25.17 billion. That's also a slight miss. The street on average was looking for $25.87 billion in revenue. The free cash flow number, that looks like a beat, coming in at about $2.1 billion. The street was looking for about $1.5 billion. And here's your gross margin number, a number that Ross Gerber said he was paying close attention to, a miss, 17.6% on fourth quarter gross margin. The street was looking, guys, for 18.1%.
Okay, well, let's talk about some of these reasons why profitability, operating income decreased year over year to $2.1 billion in the fourth quarter. Reduced vehicle average sales price due to pricing and mix, increase in operating expenses partly driven by AI and other R&D projects, lower full self-driving revenue recognition year over year, the cost of the Cybertruck production ramp, lower cost per vehicle, growth in vehicle deliveries, and gross profit growth in energy generation and storage. So there's a host of reasons why profit got hit.
Yeah, and 2020, this is a kicker. 2024 vehicle volume growth may be notably lower than 2023. Notably lower? I mean that can't be good. You're seeing the stock kind of roll over now in after hours.
We also, of course, want to just mention Cybertruck because Elon Musk likes to talk about it so much. Not a whole lot of details, at least in this early release, but Cybertruck production and deliveries will be ramping up throughout the year. And of course, there aren't. We know that they are not being able to deliver on as many Cybertrucks as they wanted, and this has been a long, long delayed vehicle as well. But it's something that Elon Musk has talked up big time.
Hey, listen, and they're also talking about liquidity. We have sufficient liquidity to fund our product roadmap, long-term capacity, expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during the uncertain period. So kind of addressing some of maybe those concerns about cash on hand.
Okay, I mean, can you read in between the lines and tell me what that means in like real speak here? Because I'm not seeing that in the numbers at all. I'm also curious as to what the actual growth story is. Is it a ramp up of Cybertruck, basically what is right now $100,000 plus vehicle that we know a lot of people just can't necessarily afford? Or is it a ramp up of some of the lower price models that maybe not have the same profit margins, but maybe provides a bit more scale?
All right, hey, we still got to take a look at Tesla. We're looking at Lam Research coming out right now. Shares bouncing around in the after hours. Down 0.3%. I was told to do Lam Research. Okay. Adjusted earnings per share for the second quarter beat the average analyst estimates. Adjusted earnings per share coming in at $7.52 versus estimates of $7.14. Revenue coming in at $3.76 billion. Estimates were for $3.7 billion. Adjusted gross margin coming in above estimates as well, and adjusted operating margin coming in just above estimates.
Listen, the issue with Tesla is, and I'm looking at our live blog too, and they're pointing out what the company says about currently being between these two major growth waves. If you believe that ultimately, whether it's the expansion of the Model 3 Y platform, and then that is going to provide momentum going forward, if you feel like that this company is going to provide more growth going, down the road, as the world says it's still committed to electric vehicles. Talk to our Keith Naughton. He says EV universe, it's still growing. It's just growing at a slower pace, and adoption is slower. So if you continue to believe the Tesla growth story, then you buy some of this. If you are more skeptical and concerned, certainly the pullback that we've seen as of late, then you get a little bit nervous about maybe what we're hearing.
Yeah, but do you buy it at PE at 66 times. I mean, that's really the question, I think, too. And you're looking at the stock off by over 5%. I do want to go back, though, to that headline from Tesla. Volume growth may be notably lower this year than 2023. And we know that they still have some production issues. Getting batteries is going to be hard, and all of that kind of factoring in here, Romain.
Well, I mean, I want to go back, though, to Carol's question that she posed here, because this gets to the idea here of competition. I was looking at the market share numbers. I mean, they've gone from 60+%, well, really 100% market share at one point, but in recent years, 60+% down to 55%. And I'm looking at the stocks of all these other names, of Rivian and GM and Ford, also moving lower here in sympathy. I mean, this isn't really a Tesla story anymore. This is really about EV adoption, as you say, Carol, and whether that is strong enough to sustain some of the valuations that have been baked into some of these stocks, i.e. Tesla.
What did we hear from the Toyota chairman
He said
yesterday?
30% of, ultimately 30% of
You're talking
the
to the
mix
Toyota
is-
chairman?
No, that's what he said.
You're talking to him. You already talked to them.
No.
Oh, because I have a
An article about
question.
what he
I have a
said.
question
But
for him, if you can
30%
pose. I know
max
you guys
is
do a
gonna
lot
be
on
mix of
radio
EVs.
there, and you
Yeah.
never tell us about. But remember, I mean, they were
Not
really
just about wine.
Right, but remember, there was all the criticism that they hadn't pushed deeper into the EV space, and they were basically saying hybrids are where it's at, and we don't really see the value in pushing the EV. That seemed, they got mocked for that, but now that seems prescient.
Yeah, exactly. Well, we will see. Again, this is another thing of like, does it just take longer to get there?
Don't overpromise.
In the meantime, Tesla shares are down about 4%. Remember, what did they rally? More than 100% last year. So again, maybe it's that valuation rethink. So we'll continue to watch in the aftermarket. All right, guys, that's a wrap. Some earnings for everybody. Our cross-platform coverage on radio, TV, YouTube, and Bloomberg Originals. We'll see you again tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, we are staying with earnings. Just a quick headline. IBM crossing fourth quarter revenue, $17.38 billion versus an estimate of $17.29 billion. So just want to mention that, and we'll continue. That stock is up about 4% in the aftermarket. Let's go back to Tesla, because it's down about 4% in the aftermarket. Numbers just out, and I think the real concern is about the outlook and what we might see ultimately, Tim, here this year.
Okay, so these numbers are worth repeating. Fourth quarter revenue coming in below estimates, $25.17 billion versus estimates of $25.87 billion. Fourth quarter free cash flow, $2.06 billion. That was higher than estimates at $1.45 billion. Fourth quarter gross margin, though, that took a real hit, Carol, 17.6% versus estimates of 18.1%.
All right, Tesla to start a next-generation platform production at its Gigafactory in Texas. Teams to work on a launch of a next-generation vehicle at Texas, and continuing to make progress on a next-generation platform. So a lot of stuff that is to come. So let's get to it, because we've got a great roundtable. Red Brown is Bloomberg News earnings reporter. He covers the numbers and will give us some more insight into what we just got. Ross Gerber is with us, President and CEO of Gerber Kawasaki Wealth and Investment Management. They have about $2.2 billion in assets under management, including about $84 million worth of Tesla stock. You folks know him well. He owns Teslas. He invests in the company. He sells at times. I do want to start with you, Ross. Are you concerned? Stock's still down about 2.7% in the aftermarket, but when Tesla says 2024 volume growth may be notably lower than 2023, I don't know. Does it worry you a little bit? Does it make you want to sell any stock?
Well, I don't want to talk about our trading because I'm not allowed to, but if you look at our, my fund, GK, we've been selling the stock over the last several months, as well as if you look at our public filings, we've been lowering our position over the last several months. So there's a lot of clients of mine who are very upset with some of the things Elon said and sold their stock in the $250 range that are probably pretty happy they did that today.
Russ, stick with this for a minute, because you've been pretty critical of Elon Musk lately, which has been a marked difference from how you've been over the past few years. I mean, you were among the biggest Tesla bulls out there. But now you're concerned. You write that Elon's becoming the Kanye of business. Is this what's hitting the company's stock, or is this a bigger question about what we were talking about earlier with EVs, EV demand falling, and what we're seeing from Ford, what we're seeing from GM? Is it a bigger issue outside of Elon's control?
I think Elon's created the issue for EVs across the board more than it's an EV issue. But, you know, the bottom line is, and you see it in the numbers, and this is what we were kind of waiting to see, is that margins continue to go lower. They're like basically not able to sell cars unless they lower prices because Elon refuses to advertise. And then the advertising he's doing are trips with his child to Auschwitz and, you know, anti-Semitic and racist comments all the time, and him, you know, basically using X as a platform for every political debate possible that he could get himself into, which is exactly how you not sell cars. So God forbid they actually got him off Twitter and advertised, maybe Tesla's problems would be solved.
Interesting. Hey, I want to bring you in, Red Brown. Things that you're seeing and noticing. We've been breaking down the earnings with our TV colleagues. The key point that you're focusing on.
Well, I think obviously the production target, notably lower volumes for next year, it does raise some questions about this strategy of continuing to lower prices. They lowered prices just last week, again, in Europe, so it seems like that is going to be the strategy going forward, but it doesn't seem to be kind of paying dividends in the company's view going forward in terms of actually selling cars still.
Yeah, and Tesla less bullish on its Cybertruck, noting in the investor deck that its ramp time will be longer than for the other models given its manufacturing complexity. So it's also adding that. All right, Ross, so can definitely, you know, respect your different tone here in Tesla. So I don't know, how do you think about this company going forward? Is it a case that it's hard to kind of remove the man and the creator from kind of the company, but how do you do that? Or do you do that at some point?
Well, what I've been saying is that the Tesla story has just changed from what the story was a few years ago before Twitter. And as long as investors are comfortable with that story, then the long term for Tesla, the story is still intact, whether it be charging, energy, EV. You know, Tesla's the prime player in this climate change revolution that they began. And the real issue is the company is being mismanaged now by the CEO, who's demanding a massive compensation package, but won't do any of the things that the company needs to really like resolve their sales and margin issues. So I think as we move forward as investors, it's really about what is the right valuation for Tesla, because Tesla's been the highest valued of the Mag 7 or one of the highest valued tech stocks for years, you know, and before he bought Twitter, you know, it traded 100 times multiple of future earnings. Today, it's trading at 60 times multiple of future earnings. But now that future earnings number is definitely in doubt. And does it really deserve a higher multiple than NVIDIA and Microsoft? And I think that's what's hurting the stock, irrelevant of the company.
Stock's still down about 2%. Hey, Tesla also noting, Ross, that they have reached the, quote, natural limit of cost down of our existing electric vehicle lineup. It's kind of corporate speak, but what does that mean?
Euphemism for we can't lower prices anymore?
What does that mean?
It's like we have reached maximum efficiency of production. And so basically every time we discount, it's just going to cost shareholders more. Now, the good news is this is great for Earth because people are getting cheaper and cheaper, you know, EVs, which, you know, are great. The bad news is it's coming from shareholders' pockets. And so if you're a shareholder, you know, it's time to really assess, like, does this company deserve a 60 multiple of forward earnings? And I think that's what investors are going to be doing over the next several months.
Okay, I want to bring back in Red Brown because he's been watching the numbers come out. Red, what else sticks out to you? I know the looking at the production numbers certainly sticks out. Anything else in these numbers here? We're seeing shares down about 2% as we speak.
Yeah, I mean, I think everything that we're seeing right here from the numbers is that this is kind of the cost you pay for the game that they're playing of continuing to cut these prices. Yeah. You're seeing a bigger and bigger disconnect between their top line growth and their earnings growth, right? They did hit record revenue. That's going to get lost in the shuffle here today. But it came at the expense of over 40% drop in their earnings, right? So it doesn't seem like it's the path forward. I think Ross is hitting on some interesting topics here as well, as kind of where does the growth come from? A lot of the share price is predicated on some of these sort of pie-in-the-sky initiatives, be it AI, huge question marks over that,
right,
with whether or not Elon does that inside the company or not. So hopefully get some more insights on that when the call goes later today.
Ross, what is the number one question on that call today in your view?
I think from my perspective, it's kind of what we're hitting on right now, which is where's the growth coming from if you're not going to grow cars by a lot, like this is not a good thing. So I think my concern is 4680, and this is the story behind the story, which is one of the scaling issues they're having with cyber and semi is that 4680 is just not working as quickly as they had hoped. And they planned all of production in Texas around 4680 originally, and they've now had to pivot. And so this has caused extra costs, lots of complexity issues, and I don't think they've mastered 4680 yet, or even close for scaling at any mass level. And this is a huge detriment to Tesla moving forward because they have to get this technology right to ramp cyber and semi, which is where growth will come from.
Hey, 20 seconds really quickly. What do you mean 4680 really quickly?
These are the new cells that that they built for EVs. And these new cells are 7 times more powerful, much more efficient, charge faster, and they're wonderful, but they haven't been able to scale them as quickly as they'd hoped.
All right, good stuff as always. So appreciate it. I know you've had a busy day. Our thanks to Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management. And then, of course, our thanks as well to our Red Brown. He's Bloomberg News earnings reporter right here in studio. Tesla shares back down about 3.7%. We're seeing in the stock fall here in the aftermarket.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Tesla, after hours, now down by 3.8%. Our coverage will continue. Tesla, with fourth quarter results that missed expectations, also says it expects the pace of growth to slow considerably this year as it works on the launch of its next generation vehicle. The outlook offered did not include a delivery target, which is unusual for Tesla, which has pegged its average annual growth at 50% over multiple years. Ross Gerber is a Tesla shareholder. He is the president and CEO of Gerber Kawasaki, and he was interviewed about the stock moments ago right here on Bloomberg Business Week.
The good news is this is great for Earth because people are getting cheaper and cheaper, EVs, which, are great. The bad news is it's coming from shareholders' pockets. And so if you're a shareholder, it's time to really assess, does this company deserve a 60 multiple of forward earnings? And I think that's what investors are going to be doing over the next several months.
And again, Tesla, after hours, now down by 3.5%. The other big tech company reporting earnings after the close of trading, IBM, it delivered a positive outlook for revenue and cash flow in 2024, an optimistic signal for the pace of corporate technology spending. Turned out to be a mixed day on Wall Street. S&P, a record there, barely up 4 points, little changed, up by less than 0.1%. S&P, which was trading above 4,900, ended the session at 48.68. Dow Industrials today lower by 99 points, down 0.3%. NASDAQ up 56, a gain there of 0.4%. 10-year 4.17%, the 2-year 4.38%. Gold 2,012 the ounce. West Texas Intermediate crude up $1 today, up 1.4% to $75.38 a barrel on crude oil. Again, recapping, Tesla out with earnings, disappointing to a lot of investors. Tesla shares selling off after hours, down now by about 3.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Do you?
I don't know. I don't know. Listen. We have a lot of thoughts about this. We've talked to a lot of guests about this, but the end of the crypto winter, man, it has been heralded long-awaited approval of Bitcoin exchange-traded funds.
Yeah, okay, true, but a key segment of the digital asset universe has lagged behind, despite previously being one of the sector's hottest corners. We're talking, of course, about non-fungible tokens, NFTs. They're based on blockchain and represent a unique ownership of assets, like images or even physical objects. They saw global sales plummet 63% to $8.7 billion last year. That's according to data tracker CryptoSlam.
Remember when we talked with Chris Rouser from Pursuits about the fashion
I think
NFTs?
that was probably 2021.
You go shopping in kind of a virtual universe and you buy
NFTs.
For designer NFTs.
Yeah, for your.
You can't wear them.
Not
you spend a lot of money.
It's like Second Life type of thing.
Yeah, anyway.
You can wear your Gucci in the metaverse.
I think our guests are going to get nervous because we're a bit skeptical. Anyway, meanwhile, keep in mind the industry bellwether Bitcoin has surged almost 160% in 2023. A little bit of perspective there for you.
Okay, so I'm really curious what our next guests have to say about all of this. And we got some time with them, so looking forward to this conversation. Scott Duke Commoners is professor of business administration at Harvard Business School. He's also a research partner at A16Z Crypto, Andreessen Horowitz, that is. And Steve Kaczynski has worked in communications at Progressive Insurance and Nestle. And together, they are the authors of the new book, The Everything Token, How NFTs and Web3 Will Transform the Way We Buy, Sell, and Create. Scott joins us from Cambridge, Massachusetts, and Steve from Ohio. Scott, I want to start with you because this book came across my desk, and it's out now, and I thought to myself, what a wild time to actually be publishing this book, because NFTs, to me, seem to have peaked a couple of years ago with all the FOMO and post-COVID kind of YOLO trading. How do you respond to that? That the book, that right now seems like a strange time for this book?
So first of all, I understand why you might feel that way, but in many senses, I actually think, in the last year and a half, and especially really in the last, 6 to 9 months, we've seen far more exciting and more creative, and I think more, sort of mass market and one might even say sort of realistic, applications of NFTs. it's really much more, as you said in the intro, these are a general purpose technology for defining ownership of both digital and potentially physical assets. And we've seen brands do all sorts of new experiments with them, some of them quite successfully. And really, sort of part of the exercise of writing the book was we were trying to understand what are the sort of fundamental principles that define this new asset class for business, right? How do you build a business around NFTs or integrate them into your existing brand? And what are those principles that survive, sort of irrespective of the state of the market or whatever, that are really about, sort of what is the value of NFTs for business and society?
So what is the value of NFTs for
Great.
businesses and society? And Scott, let's stay with you for one more moment.
Sure, of course. So first of all, as I said, it's a general purpose technology. Some uses are simply for improving the functioning of markets that have already been very complicated to manage. So if you think about like digital tickets, right? Every time you buy a digital ticket, you get like a QR code in your email. And if you want to buy one in the secondary market, right, you're trying to get to that like sold out Hamilton show or something of the sort, you have to be like really concerned that the person who's reselling the ticket to you might have sold it to 15 other people, right? It's just a QR code. They can forward the same email to a bunch of people at once. And businesses spend a lot of time and energy like building infrastructure to try and make those transactions safe. NFTs are just a strictly better technology for this problem, right? They're a unique digital asset, and the second it's transferred to one person, they know that they've received it and no one else has it. You can prove you're the owner of it. Similarly, we're seeing a variety of sort of new types of identity records. So think about like my friends at Bloomberg Opinion have recently been writing lots of articles about these concerns around AI and deepfakes. NFTs are cross-platform identity records that you can use to prove you are who you say you are on many different platforms, like independent of the platform architecture, and take with you as you move across the internet. And that sort of technology is becoming all the more important. And then last, and sort of like, sort of what Steve and I write about is one of the biggest category, there's branded utility that can be built on top of NFTs. So you start with NFTs as an ownership record, you build utility on top of them, use that to drive a new form of customer identity, and from there form customer community that drives the brand forward. And this is something brands have been trying to do for a very long time, right? Yeah. They've always wanted to extend the relationship with the consumer into the product experience. But it's been very hard to do before NFTs.
And Scott, we should know you're a former columnist for Bloomberg Opinion, so you certainly do have a lot of friends over at Bloomberg Opinion. Hey, I want to bring in Steve Kaczynski here, who joins us from Ohio this afternoon. For people who are watching on YouTube or watching on Bloomberg Originals right now, Steve, they can tell just by seeing your background that you are a fan of NFTs. I see an Ape Fest picture in the background. Is that a real Bored Ape back there? I can't tell because I don't have the certificate. Is that a real Bored Ape back there?
It is a picture of a real Bored Ape, and I do have the digital certificate to prove it. And it's funny because like what you all talk about is actually exactly the reason we wrote this book. Because I think a lot of people saw astronomical sales and they thought, well, this is like a weird sort of like fad industry. But people forget that's how a lot of industries start in the tech world, right? I mean, there are records of the internet being a passive fad, or video games being a passive fad, or cell phones not having ubiquitous use. But of course, the way the technology improves and is built upon changes that. And I can say as somebody who was, in the mid-90s in middle school coding websites, using HTML, like pre-Google and all that, this is the most excited I've been about a technology because of the general purpose use, particularly as it relates to my background in brand building. And I work with Starbucks on their beta program, Starbucks Odyssey, and they use it as a great example that has nothing to do with the over-financialization of the space.
So does this mean, it's interesting, we had a conversation with an individual over at Adobe, and as people start to use generative AI to include images, NFTs in terms of kind of protecting the license of a logo, is there something, Steve, that makes a business case for it?
I mean, they could, but actually, to be honest, I think that a business case like that is narrow compared to the wide spectrum of uses and the ways they would do it. I would say a business would more use it to prove ownership of a asset that a customer owns, to turn that customer from maybe a sort of individual who supports the business into a super fan in various ways, which again, we can discuss what those individuals are. But
I get it for art, like, right, that you get, that makes sense to me to have kind of an NFT associated with a piece of art to some extent.
like a certificate of authenticity, right?
Yeah, exactly.
Yeah. Okay.
A deed on a home. This is why blockchain makes sense to me.
Okay, what about for, you know, and thanks to crypto editor Mike Regan, who I spoke to ahead of this interview, he made the point to me that, okay, imagine, you know, you buy a concert ticket and you know, we have about a minute left, Scott, so come back on in here. What about like the use of a concert ticket, for example, that would you know, give you access beyond just actually seeing the show? We have a minute and then we're going to come back and do more with you.
Like backstage access?
Yeah, yeah. What do you think of that, Scott?
Exactly. No, 100%. And what's cool about them is, you know, both the creator, the artist, you know, whomever can provide that sort of value, and also third parties can, again, because these things are, you know, it's more like having a physical ticket than like having a QR code that just anyone could replicate. You know, you can prove that you are the owner of the asset. And so if a local restaurant wants to, you know, provide you with a coupon, you know, for a drink or dessert after the show, you know, you can do that too, and they can do it without having to interface with the, you know, with the original creator. And so both the artist can give you a backstage tour, and then a local restaurant can give everyone who had a certain tier of ticket a drink. And like all of this can happen around a single asset, you know, and NFTs are particularly powerful for this because of the third party component as well.
All right, interesting stuff. We're going to continue. We have lots more to come. Scott Duke, Commoners, is going to stay with us, professor of business administration at Harvard Business School, a research partner at 16Z Crypto, and of course, a former Bloomberg Opinion columnist also.
Steve Kaczynski, who is the co-author, along with Scott, of The Everything Token, How NFTs and Web3 Will Transform the Way We Buy, Sell, and Create. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 991 newsroom. Hey, Nance.
Hey, Tim. President Biden is picking up a new endorsement. Today, the president of the United Auto Workers Union, Sean Fain, says the union is backing Biden. Biden thanked the UAW at its convention today.
I'm proud you have my back. Let me just say I'm honored to have your back and you have mine. That's the deal.
Biden told union members he's focused on fundamentally changing the economy to give working Americans a fair shot. Houthi rebels continue to target ships in the Red Sea, and the U.S. is continuing to fight back. National Security Council spokesman John Kirby says the Houthis fired at least 3 anti-ship missiles earlier today.
One missile missed by something like 200 kilometers. The other 2 were shot down by a U.S. Navy destroyer.
Kirby says the U.S. will continue to protect shipping as long as the Houthis conduct those attacks. There's no deal yet, but members of a bipartisan group in the Senate are sounding optimistic that legislation on border security and immigration reform will come together soon. Connecticut Senator Richard Blumenthal.
There is a compromise solution here, and I think we're close to it.
Blumenthal's colleague on the other side of the aisle, Lindsey Graham, says there's no such thing as a perfect deal, but he says they're close to finding something they can do to address the border. But another group of GOP senators says they do not like what they're hearing about the deal. Well, guess who's coming back with his blend of news and late night laughs?
This is The Daily Show with Jon Stewart.
Jon Stewart is returning to The Daily Show after a 9-year absence to lead the satirical news program through the 2024 U.S. presidential election cycle. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. A 3.1% drop in Tesla shares after hours. Tesla reported fourth quarter results that missed expectations. It also warned about, quote, notably lower sales growth in 2024 as it works on its next generation vehicle. The car maker did not offer a specific delivery target today, which is unusual. It has long pegged its annual growth at 50% over multiple years. Analysts expect Tesla to sell 2.2 million vehicles this year, roughly 20% more than in 2023. Again, after earnings, we do have Tesla trading lower now by about 3.1%. Turned out to be a mixed day. We had the S&P 500 index advancing 4 points, up today by about 0.1%. The Dow, though, fell 99 points. Late day selling down by about 0.3%. Nasdaq Composite Index up 56, higher by 0.4%. 10-year yield 4.17% with a 2-year at 4.37%. Spot gold down $16 the ounce to 2012, a drop there of 0.8%. Crude oil, West Texas Intermediate up 1.4%, 75.38 a barrel. Bitcoin today up by 1.2%, still below 40,000, 39,678. So a mixed day, but push higher for both the S&P and Nasdaq today. As for the overall market backdrop, Bryant Van Cronkite is portfolio manager at Allspring Global Investments, and he was a guest here on Bloomberg Business Week.
My view is the market now has embedded a lot of optimism, and the reality is we're not done yet. We're not sure what's going to happen, and so I don't want to own businesses today, and I don't want to buy sectors today that are reliant on the generosity of the Fed. I want to buy businesses that are controlling their own destiny.
And you can hear more of the conversation on the Bloomberg Business Week podcast. Again, we've got Tesla shares selling off after hours. Tesla right now down by just about 2.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest, Scott Duke-Commoners, professor of business administration, former Bloomberg Opinion columnist. He's at Harvard Business School, a research partner at A16Z Crypto.
Yeah, A16Z, Andreessen Horowitz.
Yep. Yeah. And Steve Kaczynski, also with us. He's worked in communications at Progressive Insurance and Nestle. Together, they are the authors of a new book, The Everything Token, How NFTs and Web3 Will Transform the Way We Buy, Sell, and Create. Scott's out there in Cambridge, Massachusetts. Steve is joining us from Ohio. I feel like we've been talking, though, about this happening for years now. Having said that, Scott, let me kick it back to you for a moment. So, to quote kind of a Beatles song, I woke up, got out of bed. Tell me how NFTs could impact me, Carol Masser.
Okay, like from the morning, in the moment you get up?
Yeah.
You probably, okay, so you maybe you're like getting some coffee, so you get some coffee from Starbucks, and Starbucks' new Odyssey reward program is, sort of taking a track of what you've consumed and discover you've finished a journey, you get your new coffee stamp. So that's one thing. And maybe you chose your coffee because Odyssey, as part of the program, also directly incentivized you to go and learn some things about the different coffee varieties they have, and you became a more educated consumer of Starbucks. You read the newspaper too, right? So you're probably logging into Bloomberg Opinion to read the morning opinion reports or their opinion articles, but then also you're gonna go cross-platform. And maybe you have an NFT for a subscription that lets you into 3 different newspapers at the same time, or all the news associated with your local sports team.
That makes sense.
It's each page you log in, you connect your crypto wallet, it reads the NFT, it shows you the sports news while you sip your Starbucks coffee and earn rewards.
Okay. Are you satisfied, Carol? You're getting there? Okay, she's a skeptic, but she's getting less skeptical. Hey, each of us, I got to tell you, each of us were struck a couple of weeks ago when we heard BlackRock's Larry Fink talk about tokenization with our own David West. And I want to play a clip of that. Check out what he had to say.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities around bonds and stocks and digital by having a tokenization. But the most importantly thing, we can customize strategies through tokenization that fits every individual.
Tokenization that fits every individual. That once again was BlackRock's Larry Fink talking tokenization with our own David Weston just a couple of weeks ago. Steve, I want to bring you in here and get your reaction to that, because we do hear a lot about tokenization of traditional financial assets potentially disrupting a lot of middlemen and intermediary work that is done on Wall Street. But take us through what exactly that would mean for the financial industry.
Yeah, I mean, for the financial industry, what that means is that it sort of does exactly as you said, remove those middlemen and make for a more clear transaction, meaning that it is a very clear ownership going from one to the other, tracked on a ledger. This applies to the entire financial industry. This can apply to real-world assets that you're talking about, where you physically pin a digital asset to something to prove digital ownership, which takes away a lot of potential issues you have coming from one intermediary to the other. It makes it a much more clean transaction, as, again, the blockchain is just a cleaner technology that removes a lot of friction as you start to tokenize not just sort of the financial assets, but any physical asset you own in order to sort of build upon it.
Steve, is this the biggest opportunity for Web3 for the blockchain?
I mean, it depends on sort of who you ask and how you ask it, right? Because there is the really poetic use of the blockchain where when somebody is fleeing a company of unrest and they have a blockchain-based credential, like say a teaching degree. Well, when they go to a new country, if they have to flee quickly, their money digitally can go with them, and their sort of degrees and credentials can then go with them in a provable way, meaning that they don't sort of have to start over when they get there. So that to me is always the sort of end goal right there. And then from a financial perspective, I just think the actual way companies are going to be able to create entire new sectors within their companies is actually the biggest financial aspect and opportunity, because it means that a company is going to be able to create entirely new revenue streams while creating aligned incentive structures with their customers all at once. It's an interesting system where everybody can win, both the consumers and the brand. The brand can build value back in the NFTs. The NFTs can then raise in value. And so the customers can then decide where they want to purchase or utilize them.
All right. Well, with anything that's kind of new, there is the question of oversight and regulation. And this is something we've been trying to figure out. You know, the whole idea of digital, currencies is this idea that it's outside the traditional network. So you guys write in the book, at the same time as with any novel asset class, NFTs raise questions about regulation. So, Scott, come on back in here. Who will ultimately have oversight of this? Because we're going to need something, yes?
Yeah, and again, I don't have a clear answer or prescription on this, but it's very complicated, of course, because these digital assets can have many different functionalities, and their functionalities can evolve over time potentially. Right? We talk in the book about something that starts as a collectible brand asset and can potentially take on other functionalities. Right? You get a ticket, and then gradually, it becomes the anchor of a rewards program or something of the sort. I think it's very important to think through, sort of how those different assets interact across different categories and so forth. And it makes it a really challenging problem. But unfortunately, I don't have any easy answers.
Hey, Scott, we have a minute left, and I just want to talk about the metaverse real quick. Because a couple of years ago, there was a lot of hype around it. I mean, look at Facebook's name change to Meta, how NFTs would play an important role, but a lot of that has seemed to die out, and many big tech companies are chasing the shiny new object of AI. Was the potential of the metaverse overhyped?
So, Steve and I talk about this in the book. We take a very expansive concept of the metaverse. We think the 3D world thing is not exactly the right way to think about it. The metaverse is all the digital spaces we interact in. We're in a metaverse space right now. I'm calling in over Zoom, talking with you.
That's a good point.
And what NFTs enable you to do is to bring your digital asset from place to place, right? Like that what is your NFT day? It's like you have a single master account that is what holds your subscriptions, to hold your coffee rewards. It's all of your different social media identities, lets you share your reputation across them. And so in that sense, we're having more and more metaverse interactions as we spend more and more digital time, especially since the start of the pandemic. And NFTs are a key enabler of that. And as you say, AI is going to play into this as a component. But the more AI starts to distort and confuse those spaces, the more important it is for people to be able to build core and trusted and cross-platform digital identities for themselves.
All right, we're going to have to leave it there, and hopefully we can continue this conversation in the future, because it is
got to come back.
We have a lot of questions, but it's really fascinating. Scott Duke, Commoners, Steve Kaczynski, their new book, The Everything Token, How NFTs and Web3 Will Transform the Way We Buy, Sell, and Create. Guys, thank you so much. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Tesla shares trading lower now by about 2.5%. Tesla did report fourth quarter results that missed expectations and warned about notably lower sales growth in 2024. Ross Gerber is a Tesla shareholder. He's also the president of Gerber Kawasaki, and he was a guest right here on Bloomberg Business Week.
You know, the bottom line is, and you see it in the numbers, and this is what we were kind of waiting to see, is that margins continue to go lower. They're like basically not able to sell cars unless they lower prices because Elon refuses to advertise. And then the advertising he's doing are trips with his child to Auschwitz and, you know, anti-Semitic and racist comments all the time. And him, you know, basically using X as a platform for every political debate possible that he could get himself into, which is exactly how you not sell cars.
And again, we've got Tesla lower by 2.6%. DuPont plunged 14% as the company talks about weaker business than expected. More on that story from Bloomberg's Denise Pellegrini.
The chemical maker now says it sees net sales of about $2.8 billion for the first 3 months of this year. That is well below the more than $3 billion that was expected by analysts surveyed by Bloomberg. CEO Ed Breen says DuPont saw inventory destocking within industrial businesses and continued weak demand in China. And he says those trends are continuing this quarter. Also maybe rattling investors a bit, DuPont's adjusted earnings forecast for this quarter is way below some analyst estimates. On the other hand, DuPont also says it sees stabilization in the semiconductor business. DuPont's expected to report full quarterly results next month. Denise Pellegrini, Bloomberg Radio.
And again, DuPont down by 14% today. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody. Tim and I getting ready to wrap up the Wednesday edition of Bloomberg Business
Is it
Week.
only Wednesday?
It's only Wednesday, Lemon.
That's a week.
Yeah.
There's a lot happening this week.
A lot of interesting earnings. Tesla, I'm looking at, down 2.7%. Don't go anywhere because Daybreak Asia coming up in a couple of hours. Bloomberg Daybreak Asia anchor Doug Krisner's here in studio. We're kicking it with Chris.
How are you? You just had to go there, didn't you?
I did.
We're good. You know, we found today another record day on the S&P 500.
Barely, right? It was a very small gain.
It was, but before that, we had Microsoft hitting a record high. We had Alphabet hitting a record high. Microsoft, $3 trillion market cap. Alphabet hitting a record high. You had Meta Platforms hitting a record high.
Irrational exuberance, anybody?
Well, I was listening to you. Yeah, you brought up Yardeni's work.
Yeah, and that's what
very
I
respected guy from back in the 90s, and that's when I became acquainted with his kind of analysis. And it's not surprising that he's going back to the end of the 90s to draw the parallel.
Do you think it feels like the 90s?
You know, that was a very different period.
Right.
Right now we've got a restrictive Fed.
Right.
Back then, you'll recall it started with the Asian financial crisis. Then there was a long-term capital situation.
Right.
And then the Fed being very fearful of anything that may have happened in the financial system going into Y2K. So we had 3 years of very accommodative monetary policy. And I would have argued back then that that's one of the things that was actually feeding the bubble in the NASDAQ.
I just remember the startups. Everybody went to work for a startup.
That was
there
that true.
So much money being thrown at anything and everything, too.
Right. That's another part of the story. And I don't think we're seeing anything like that, nearly.
I feel like the market kind of shakes things out pretty quickly. If there's things that...
Like differently than it used to?
Yeah, well, I do. Like even...
Because the startup thing that you're talking about felt like 2020, 2021. Like that to me felt...
But the internet
with the YOLO stuff.
It was such a new thing. Nobody, even when Jeff Bezos would speak about his plan for Amazon, if it was a head scratcher, what are you talking about? Nobody is going to, resist going to a brick and mortar store and opt to do.
Isn't that crazy? I still remember doing a piece like, "What is the internet?"
Yeah,
like it's not that long ago.
No, it's not, and that's probably how these two Web3 guys feel talking to us. Because that's what they argue.
We just did a interview about the Everything Token, how NFTs and Web3 will transform the way we buy, sell, and create. And there's some things like we talk about, like, a title for a house, or there's some things that maybe it makes sense, but then who oversees the blockchain and the NFTs? Again, you get to the
It's
regulatory
a public
concerns.
ledger.
Yeah.
Everybody
Would
oversees
you buy
it.
it like what was the NFT that everybody bought?
The Bored Ape?
Would you buy the
Everybody.
That was supposed to be the transformative technology, right? Blockchain. I don't think it's really ever happened.
It hasn't happened.
And
yet.
now we're so focused
Agreed.
on AI, and I think AI is going to measurably improve productivity. We're already seeing that, right?
Right, exactly.
So,
Yeah, that
Anyway,
that-
what did you learn about Tesla today? You were talking when I came in about Tesla.
outlook.
Are we at peak EV right now, do you think?
I don't think we're at peak.
I don't think we are at peak either.
But I think what I think is interesting is that Tesla actually didn't come out and say how many vehicles they would sell this year. That's very interesting.
Which is a little bit of a bummer.
We can agree that it's slowing, right? That the growth is slowing.
Oh,
There's still growth, but at a slower pace, right?
Right.
So don't you think ultimately at some point, I mean, none of us have EVs. I would like to have one, ultimately.
What's holding you back?
They're really expensive. I know the prices have
That
come down and
shouldn't-
stuff.
No, that's not the real reason. No, it's the charging infrastructure that you're.
I can charge.
worried
I've
about.
got a back parking spot. I can just plug it in.
All right.
Yeah.
So that's interesting. So you
Sticker
really
shock.
could get one.
Sticker shock. What?
You really could get one.
Why, because they've come down so much?
No, well, because you have a parking spot with
I
because I think
could.
that
I could.
keeps a lot of people who live in multifamilies.
You need to have an EV. Doesn't have to be a Tesla.
You know, I got a 10-year-old car. It's still pretty good.
What kind of car is it?
It's a car.
Shares are down 3% for Tesla. What stuck out to you about Tesla?
Just slower growth.
Yeah. Yeah. And that's where you start
And
to
the
look at
Cybertruck, which has kind of got a big question mark over it in my mind.
Yeah, they were kind of hedging on the call. Yeah, exactly. All right, everybody. Kicking it with Doug Krisner. Thank